Welcome back to another episode of From Scratch to Profitability in Forestry. In this video, I'm going to be teaching you guys four things: the market session, market participants, news events, and then top-down analysis. So without further ado, let's get to the first one, which is market session. In the forex market, we have four different types of session. We have the London session, number two, the New York session, number three, the Tokyo session, number four, the Sydney or Asian session. Now, these four sessions, they all affect the market in a very different way. The London session, for example, opens at 8 a.m., which is Nigerian time, closes at 2:30 p.m. Nigerian time, being the busiest of all sessions, controlling 31% of the market. That is why you see a lot of traders trade during the London session, because the market moves more faster in the London session and there are more liquidity in the market in the London session. So the London session is very, very, very important. The next important session is New York session. Opens at 2 p.m. Nigerian time, and then it closes around I think it closes around 5 or something like that Nigerian time, controlling 19% of the market session. So the session a lot of traders pay attention to, and the session at which the market have a lot of volatility is the London session and the New York session. So the Tokyo or Sydney session, the market does not really have a lot of volatility, so therefore traders do not really participate in it. So pay attention to the London and the New York session. That is your main focus. Now, London and New York session, they collide at 2 p.m. Nigerian time, making the market to move really fast. So by 2 p.m. or 2:30, or most importantly 2 p.m. By 2 p.m., London and New York session collide, because if London session closes at 2:30 p.m. while New York session opens at 2 p.m., so the both of them collide. That collision makes the market to move really fast, rapidly. So pay attention to the market session. And then number two, which is market participant, the people that are involved in moving the market. And in the market participants, we have the banks, corporations, governments, financial institutions, retail traders, or individual traders like us, like you and I, traders. These are the people that participate in the financial market. And then we have types of order or order types. An order is an offer set using your broker's trading platform to open or close transaction if the instructions specified by you are satisfied. Basically, the term order refers to how you will enter or exit a trade. Here's supposed to be number one. Number one, we have market execution. Is number one. Number one, we have market execution. A market order is an order to buy or sell at the best available price. What this means is that you just press the buy or sell button. You don't set any order. You see your setup, you have your stop loss and your take profit, and you just press the buy or sell button at that current market price. Number two, this is supposed to be number two, sell limit order. A sell limit order can only be executed at the price higher. So if you see this diagram here, this is the diagram of the market. The market is trading up, so you are saying that as soon as the market gets to this level, based on your analysis, you are expecting the market to drop. One of the reasons why we use orders, which is we use different types of orders, is because if you are not with the chart, if you will be away from the chart for some time, you can set an order. So even though you are not with the chart, as long as you already set that order, if the market gets to your analysis point, the market will execute the trade on your behalf. If it go in your favor, the market will take the profit. If you have a take profit price also, if you set a take profit price also, the market will take the profit for you and secure the profits for you. And also, if the market go in a loss and you have a stop loss, the market will close that trade with that amount of loss and secure the rest money for you. So the reason why we use orders is when you are away from the chart. But if you are on the chart all day, I don't advise you using orders because you are literally seeing every movement the market is making. So we have number one, number two. This is actually number three, buy limit order. A buy limit order can only be executed at the price lower. So what this means is just the opposite of the sell limit order. The price is dropping, the price is dropping. So we are saying that if the price gets to this level, it should reverse from dropping to start buying. The market should start buying if it gets to your buy limit order area. Then number four, we have a sell stop. A sell stop is entered at price below the current market price. Now, the little difference between the sell stop and the sell limit is that for the sell limit, you are expecting the price to first of all go up, and then once it gets to your sell limit level, it should start falling. That is for the sell limit. Now, for the sell stop, you are setting the price at the front of the market, which means the market is already selling, the market is already falling, the market is already in a bearish trend. So you are setting your order in front of it, that if the market gets to the price at which you set your sell stop, it should continue going down. The market should continue going down. That is what the sell limit means. So you can see the arrow here. You can see this arrow here. If the market gets to your sell stop, it should continue dropping. Vice versa to the buy stop. A buy stop order is entered at a buy price above the current market price. Vice versa. The market is already buying. The market is already in an uptrend. So you just set your buy stop that if the price get to this level, the price should continue pushing up. The market should continue going in your buy direction, which means based on your analysis. That is why I use the buy stop. So these are the different types of orders we have in the market. So next we are going to move to news events. Next we'll be moving to news events. And one of the app we use in checking for news is the Forest Factory. Also in this video, I will show you how to use Forest Factory. Now, Forest Factory is where you get your news updates. Now, at first, if you come to Forest Factory, yours might be showing different types of news. But there's a way you set it that it will only show the currency that you are trading. It will only show the news that will affect that particular currency. So over here, which means here you can set this week, you can set your date. So if let me say today is Monday, for example. So you set your date from Monday December 2nd to Friday. Then you say apply setting. Now it's going to show you news that is from Monday down to on Friday. I'm going to show you news from Monday down to Friday. Now, if you look at my Forex Factory, you will see that we only have USD, GBP, CAD, USD. The reason is because I set mine to only show me news that will affect this currency, because these are the instruments that I trade. So the way you can do that is to just come to this little icon here, come over here, click on it, then you can see currencies. You can see CAD, GBP, JPY, USD. So you want to click on the currency you are trading. If, let me say, for example, you are trading Euro USD, then you should click on Euro and also click on USD. If you are trading, for example, USD chef, you should click on chef and also click on USD. So click on the currency you are trading so that you can get the news of that particular currency, so that you won't be getting any kinds of news. Now, to this color, to these folders, this 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 yellow one, it means a low impact news. Low impact news. The orange color means medium impact news, while the red color means high impact news. So you want to pay attention to the red color, to the one that have the red color. You can see we have currency, we have impact, we have date, we have time. This time here is Nigerian time. Is Nigerian time. Okay, if you are in Nigeria, this is Nigerian time. But if you are not in Nigeria, you can set your own to the time to your current location. Okay, but that is Nigerian time. If you want to set it, you can click here and set and change yours. But yours should be Nigeria time automatically. So you can set it to your time. You can set it to different time that you want, but you want to pay attention to this USD news event because they are very, very important. As soon as these news are released, the market move rapidly, which means, for example, if by 4 p.m. USD, this news is released by 4 p.m., any instrument at all that has USD in it, will move fast. It will react to this news. Any instrument at all that has, let's say, by 2:30 on Friday, December 6th, any instrument at all that has CAD on it, which is the Canadian dollar, it will react to this market rapidly. Now, among all these news, there are three major news you want to pay close attention to. There are three major news. One, we have the CPI news. The second one, we have the NFP news. The third one, we have the FOMC news. So those three major news, pay very, very close attention to them, because that is where you see big candlesticks in the market. One long candlestick can just come out in either go in your favor or go against you. So since we are done with the market session, market participants, news events, the fourth one is going to be top-down analysis. Now, in this top-down analysis, it is where we get to analyze the market. It is where we start making decision based on what the market is giving us. So pay very, very close attention now, because it's getting more interesting and you need to open your eyes a lot more now. So what is the meaning of the top-down analysis? Now, what the top-down analysis means is that you are able to interpret the market from the higher time frame down to the lower time frame before making market decision. That's why they called top-down analysis. You are able to interpret the market from a very high time frame down to a low time frame before making market decisions. Now, different in top-down analysis, different traders analyze their market based on the kind of traders they are. If you are a swing trader, you might be analyzing from the monthly down to daily or 4 hour. If you are a day trader, Your analysis might be from the daily, the 4 hour, the 30 minutes, or 15. So I am a day trader, so my top down analysis starts from the daily, the 4 hour, and the 30 minutes time frame. And because I've analyzed the market a lot of the time and I know the time frames that work for me and the time frame that work best for me, so I only use three time frames: the daily, the 4 hour, and the 30 minutes time frame. But the same analysis principle and the same strategy is applied to all time frames. That's a very, very tricky and funny explanation in forex trading. If you can find bearish engulfing in the 15 minutes time frame, then you will definitely find bearish engulfing in the monthly time frame. It's just a matter of time. So the analysis apply to all time frames in the same way. Okay, but some are just more active than the rest. So in the top down analysis for this video, we'll be analyzing USD JPY. USD JPY, if you don't know what USD JPY is the Japanese yen and US dollar, because we are trading currencies. So I'll move this one away from here. Now for the top down analysis, you will always need to start from the line chart. Always need to start from the line chart. Just like we talked about in video 1, that the line chart you can easily spot trends on the line chart. But very quickly, before we enter the top down analysis, let me show you a indicator that you can use to identify market session. Now just come to your indicator tab here, click on search for market session by Leviathan. Market session by Leviathan. If you click on this market session by Leviathan, click on it. Now it's going to be showing you the market session, which is the market session that you are currently in. You can see now it's for today. You can see that the London session is already open. For today, the London session has already opened because the time now is 8:20 a.m. And remember, we said that the London session opened by 8 a.m. in the morning Nigerian time. So the London session has already opened. So if the New York session has opened, it will always indicate it. London session, New York. So you can also set this, customize this. So you can see for me in the inputs, I only click on the London and New York session because those two time frames are my main focus. So you can click on whatsoever I want. If you want to trade Tokyo or Sydney, that is your choice. But mine, I only click on the London and New York session. So let's go back to the top down analysis. We'll start from the daily, and from the daily, we'll start by using the line chart. Now, in the daily time frame, what we are basically looking out for is firstly the market trends. You must have heard this before. The trend is your friend. Always trade with the trend. It's very, very important. If you are trading with the trend, you stand a better chance of winning. If you are trading against the trend, you stand a better chance of losing. So you always want to trade with the trend. So just by looking at this line chart now, we can say that USD JPY is in a uptrend. Okay. So we'll look for support and resistance in the daily time frame. Remember in video 3, we talked about what support and resistance is. So here we look for support and resistance. We already found one here. So we'll take this one. And resistance, we'll take this one. Here we have the resistance level there. Then we have the support level here. There are a lot. We have one here, we have one here, and we have one around this area. Also, we have one here. Also, we have one here. Reduce this size. Have one here. Now, in order for you not to miss the horizontal line you have drawn on the chart, just click on it. You can double click on it and just write daily. Now, the daily, you can now, even though you scroll down to the lower time frame, you can now know that this line is from the daily time frame. So you click on the daily. Now you have your support and your resistance. Also, you want to look for another one. Look for another one here. For another one. Oh, here you have your support, resistance. You have your support there. You have your resistance here. You have your resistance here. Now moving from the daily time frame, after picking your support and resistance in the daily time frame, let me pick one more here. One more here. Now you go down to the 4-hour time frame. 4-hour time frame. Now I'm going to be reducing this line because remember this line will draw from the daily time frame. This one D and we'll draw from the daily time frame. Now the 4-hour time frame, I will change from the line charts to the candlestick chart. Now in the 4-hour time frame, what I'm basically looking out for is liquidity areas. Liquidity areas like fair value gap, like order block, like equal highs, equal lows, recent high, recent lows. So now we already have in mind that the market is currently in a uptrend. All right, so anything we should be looking out for is we should be looking out for a buy. Should be looking out for a buy. And now this black horizontal line, we also record that this line is a support and resistance level from the daily time frame. So it is very, very important because the higher the higher the level, the stronger that area will be. Let's say, for example, a support and resistance level from the daily time frame is a lot more stronger than the support and resistance level from the 4-hour time frame. Vice versa, a support and resistance level from the 4-hour time frame is always and will be stronger from a support and resistance in the 15-minute time frame. So the higher the time frame, the more valid that area would be. Now looking at the chart, the market is currently coming down towards a major support level. Now you want to mark out this because this would be like the order block, but this is actually a hammerhead because we say an order block is the last opposite candle before an impulsive move. So this was the last opposite candle before we have this impulsive move. And normally order blocks create fair value gap. That fair value gap is what we have here. The fair value gap was from here to here, but the market filled it. So you will now take the fair value gap from these lowest points to the current place at which the market filled it to. So you now take it from here to here, right? Because the original fair value gap was from here to here, from this leg here. Let me log this in. From the original fair value gap was from here to here, from here to here. But now because the market came down to fill it, you will change it from there now to the place to this current market wick. So the remaining fair value gap we have left for the markets to fill, you will have, this is the remaining fair value gap we have left for the markets to fill, right? Now that fair value gap is a liquidity level. That fair value gap is a liquidity level. My strategy does not allow me to trade from fair value gap, but it allowed me to use fair value gap as my take profit level. I don't trade fair value gap. I only use fair value gap as my take profit level, at least for now, and it is working for me. I don't know, maybe in the future I might develop the strategy, refine it a lot more, and then start trading fair value gap. But for now, I only trade support and resistance, and it's a very very simple strategy. You just need candlestick confirmation, the market gets to your area, then you take your trade and then you relax. Now you also want to mark out this other block, because this other block is a very 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 strong liquidity level, a very very strong liquidity level. There are two ways you can mark that one out. You either just pick out the week, because you want to pay attention to this week. Pick out this week. Here I want to write fair value gap, because I'm analyzing this chart, because I understand that this video is for beginners. Fair value gap, and then I want to mark out this level. This is a liquidity level, but you can indicate it with the dollar sign. Dollar sign, it means a liquidity level. Now we have a fair value gap there, and the market is currently coming down to a liquidity area. So we have our fair value gap in our liquidity area in the 4-hour time frame. Now we'll now go down to the 30-minute time frame. But firstly, before we go down to the 30 minutes time frame, you also need to understand that the market currently broke. The market currently changed character around this level. The market changed character around this level. But that does not mean we are looking for a sell, because the overall direction is a buy. Okay, so we are still looking for that buy setup. Now go down to the 30 minutes time frame. In trading, I will always say this: in trading, the only way you can be perfect at it, and when I mean perfect, it does not mean you'll be taking 100% win, you will have 100% win rate. The only way you can notice some candle and you'll be confident in making trading decision is when you come on the chart day after day. It's when you put in the time. It's when you put in the time to actually dedicate yourself to knowing these things. You can't just know these things at once or overnight. You have to do it over and over and over again, and that can take you a lot. That can take you a lot more time, but with time you get to know it and everything will be in place. Now, in the 30 minutes time frame, what we'll be looking at for is just the candlestick patterns, candlestick patterns. Now, just by looking at this candle now, you can say that each time we have a small bullish candle is followed by a larger bearish candle. A small bullish candle is followed by a larger bearish candle. Small bullish followed by a larger bearish candle. But as the market is getting towards this level, the candlestick is getting smaller. I'm telling you another candlestick patterns now. The way you look at candlestick patterns, okay, candlestick patterns, the way you read them, the candlestick is getting smaller. This, I think this is called the shrinking approach. Is that when the market approaches your area, the candlestick will be getting smaller. Now, if we want to take this trade, if I want to take this trade, for example, for the case of this analysis, I pray the market gets to a point of interest, show me a confirmation, then let's just take this trade for this video so that it will be a live trade. But if the market does not get to my area, no issues. Now remember, we have a fair value gap here to be filled, and also we have a liquidity level here to be taken out. What all you just need to do is you just have to be patient. You just have to be patient. And patience is very, very important. You just have to wait for the market. You just have to wait for the market to come down to this level, to fill this fair value gap, fill it, and not only fill the fair value gap, but come down to this level. Now, when the market come down to this level, to confirm that the market has given you a liquidity sweep, that the market respect this level, there will either be a weak rejection. As soon as the market gets to this level, trade below this level a little bit, there will be a weak rejection to the upside. The market will reject this level to the upside. There will be a weak rejection. Now, for that weak rejection, a lot of the time, the market will close above this area with that weak rejection. The next candle will open with 30 minutes time frame. Now, you will not jump in as soon as the next candlestick open. You want to wait a little bit for the next candle to trade below this level a little bit and then create a weak rejection to the upside. Now, as that next candle is creating a weak rejection, just wait for the candlestick to give you a little bit of bullish engulfing, bullish candlestick, and then you can now take the buy entry from here. Then you can now take the buy entry from here. Buy entry, you have your stop loss a little bit below that wick. Then your take profit will now be at this. Take profit will now be at this recent high, because this now is a resistance to the market. This level is a resistance to the market, because you can see the market rejected this level. The market rejected this level, acted as a support here, acted as a support here, right? A support here, and it acted as a resistance here. That's resistance here. So that will not be your that will not be your take profit. It's a very, very, very simple strategy, but I cannot give you everything in this first video. In the next video, you pick something important from this video. The next video, you pick something important. In the next video, you pick something important. Before you watch 3 to 5 videos on this analysis and this strategy, you must have gained something that will make you to take good decision in the forex market. The reason why a lot of traders give up is because they are actually lazy. Because when I was learning forex trading, I watched a lot of video. I literally spend the whole day watching like 5 to 6 videos in a day, writing books. I have my jotters that I wrote. I was even drawing patterns on book, which at that time I thought I was doing myself good. But now I realize that writing patterns in books is actually stupid, because you can actually have a screenshot of it on your phone and look at it every single day. So I did all of that just to gain some little knowledge, because I don't even have a better knowledge of it yet. But this little one that I have is working for me, and that's why I'm giving it out. So if you are not patient enough to watch 1 to 3, 5, 6, watch as many videos as you need to watch before you can master at least some skills. Then as soon as you master that skills, you can now start refining that skills. Every trader still watch trading videos. Even if you are a pro trader, you still go back sometimes and say, okay, it's like I'm missing something. You go back and you go back to the drawing board and refine yourself. So that's how it works. So in this video, that will be it for this video. In the next video, we'll refine it again, we'll break it down again. You understand another thing in that video. So that's how you'll be picking different things from different video posted on this channel on the playlist of from scratch to profitability in forex trade. See you in the next video.